Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, fresh start to the week. Let's go over the market. Let's go over Tesla. Let's just go over everything as per usual. So, and as usual, if you guys enjoy these videos, this video, just in general, the videos, I guess, don't forget to hit that like button. It does help a lot. I would very much appreciate it. And on top of that, this is not financial advice. I'm not a financial advisor. Make your decisions, do your own research. But moving into a Tesla looking like it's actually closing after a pretty volatile day for the most part, actually. Pretty up and down. Green actually up about 0.6%, putting us at about $174.43. Compared to the market, it's kind of in the middle, I would say. It's underperforming tech in general because QQQ is up 0.75%. So Tesla with a slight underperformance there, relative to QQQ. But relative to SPY, not too shabby. So kind of a mixed day, a lot of confusion, and rightfully so, right? Of course, we had over the weekend quite a bit of news if you've been following it. Essentially, we had two financial systems, or like banks, if you will, pretty much straight up collapse. The main one being, of course, a Silicon Bank, can't even speak, SVB bank, pretty much just completely collapsed more or less. And yeah, so that was a pretty eventful week to say the least. The markets pretty much digesting that news and also digesting the fact that, well, tomorrow, guys, ladies and gentlemen, is CPI day, and you guys know how CPI usually works, right? It's a very hard thing to predict, but we'll try our best to figure out what might actually happen moving forward from here. Now, again, like I said, CPI tomorrow, very difficult to predict, but let's see what we can do here. So, all in all, Tesla pretty much actually opened up extremely weak. I think at its weakest point, it was down. Let me see, from yesterday's close, which was here, all the way down to the lowest point. It was actually down. Wow, I actually missed this part. It was down at 5.5% from like the worst part of today. I don't even realize. I woke up and I saw it was down like almost 4%. I ended up selling a put, a cash secured put on Tesla. Then I went back to bed, didn't really get good sleep. Woke up and Tesla was still kind of in that range, ran up, and then I ended up buying back that sold put. So buy to close. Didn't make too much, but not too bad at all. I mean, percentage-wise, it wasn't bad. Honest, percentage-wise, it was, I think, a solid maybe I think it was like 35% or something like that, which isn't too bad. Not too bad at all. But all that being said, I did end up taking that profit. I still have a bunch of other cash secured puts right now. The volatility, of course, being up. Remember how we talked about, and literally, I think just before the spike happened, I think it was somewhere around here we talked about. I'm like, man, that's just strange that the VIX is under 20. At least it should be 22. Well, now it's at 26, almost 27, all the way in the 30s actually this morning as well. So keep that in mind. Volatility is absolutely spiking, which is good for selling options, not so good for buying options. You want to be buying options when it's down here. You don't really want to be buying options when it's all the way up here, especially in the 30s. Because you're paying a substantial premium on those options. Just if you don't know how that works. If you don't know how that works, by the way, again, just my opinion, I wouldn't even touch options. Don't even bother wasting your time with them because you will most likely lose money if you don't know what VIX crushes or all that kind of stuff. Very, very important to understand. But moving back to Tesla over here. So we ended up coming down to this overall level. Now, if you're curious why we exactly more or less bounce at this level, you can see if you move into here, this right here, the white line, of course, being the 50-day moving average. We talked about this several times, right? Even back when we were still up here, I talked about how, at the very least, I think we'll come down to the 50-day moving average. And we pretty much did exactly that. And now we're getting kind of sandwiched in between the 50-day moving average and the 100-day moving average, right? The yellow line being the 100-day, the white one being, of course, the 50-day. So this is kind of like this weird limbo land now, if you will, because it really depends on which way we go first, right? If we can get up above this 100-day moving average, which is around 176, let's say for now-ish, that actually to me tells me that there is a possibility that we get a bit of a rally. Honestly, there's a potential to get a bit of a rally, an actual retest of this area, like a proper retest of this area, which will put us somewhere around like this area right here. And then I think we'll continue making our way back down even further, which I do think that we will still go lower. I don't think this is the low yet. I think we will go even lower than this. I'm like 80% sure we will. Not 100, because nothing is 100%. If anyone says they're 100% about something, they're full of shit. But I am pretty damn confident that we will ultimately, regardless if we get this bounce, still go at least one more leg lower. I'm pretty confident about that, right? Now, of course, partly comes down to tomorrow's CPI. The RSI is still looking overall weak, right? It's showing some bounce here, but it's nothing to write home about just yet, right? Nothing really too strong just yet. So overall, it's definitely more weak, more bearish than bullish, right? And if you want to determine, okay, let's say we do get a bounce. Let's say CPI comes in tomorrow and maybe it's not that bad, or for whatever reason the market decides to rally off of it and we get a kind of like a dead cat bounce essentially, more or less, after this kind of straight down right here for the past week and a half, 2 weeks, whatever this was, right? You can do a little bit of a Fibonacci retracement right here and you can kind of get a decent idea. And I would be genuinely shocked if we go anywhere higher than the 0.5 on this retracement, right? So I would expect a bounce up to the 0.382, and honestly the highest is the 0.5, which is essentially between 184 to 190, which is essentially more or less where I drew this line right here. You can see the circle, right? And that also is essentially would be the retest of this overall area that was, giving us quite a bit of support in this overall general, situation, if you will, when we were consolidating. So I wouldn't be surprised if we get like a true retest of that area, before making our way lower and essentially confirming this drop down. That absolutely would not surprise me whatsoever. So that's essentially option A, right? That is right there, option A. And in my opinion, this triggers if we pretty much go up above and start, actually holding above the 100-day moving average, which again is around 176-ish, give or take, right? That is that. But again, even if you do get up here, I personally, just my opinion, could be wrong, I would think that would be a position to essentially just get puts, really, just hedge. Or if you have shares that are still, you're willing to share or sell, but that's just my opinion. Again, I could be completely wrong. This is just, for fun, nothing to take seriously. Just, it's, at the end of the day, it's your decision, your money, do what you want, right? I do not care, but that's just my opinion. But, the other option, of course, is, well, CPI, let's say, comes in not so good, right? Not so hot, let's just say that. Then I do think that ultimately we will get most likely just a straight sell-off, right? Now, there is a possibility that, oops, oh my goodness. Let me go ahead and I'm actually going to remove this one as well for now. There is, in my opinion, a possibility that what we get tomorrow is going to be essentially like an initial sell-off into the rally that I just talked about, into the final sell-off after that. So essentially it will go something like this for like Tesla, for instance, right? I do think there's a decent possibility that we essentially create like a miniature inverted head and shoulders right here. So it'll be something like this. We have this here, and then we come down one more time somewhere around here. So Tesla will come down to, let's say, maybe like 171 or something like that, which isn't like that much lower from here. Like it's only like a maybe like a 2% move to the downside, which isn't too crazy from where we are right now. But there is definitely a possibility that we get that initially as the CPI comes out, get a bit of a downturn, kind of make this inverted head and shoulders to around the very low 170s, and then from there we end up getting a rally. And everyone starts getting hopeful, hopium kicks in. We get a rally up to this area over here that I talked about, so essentially I go like this. People are like, excited. They're like, wow, it was priced in, guys, it was priced in. And then I think we go even lower. But again, regardless of what happens, I'm just trying to predict this very short time frame, which is extremely difficult to do. It's, in my opinion, the shorter the time frame, the more difficult it is to predict. But, regardless of what happens, regardless if we get this kind of move, if we just go straight up, if we get a tiny bit of pain and then go straight up, or maybe just straight pain in general, I do believe that regardless of which path it takes, that we still will ultimately, regardless of what happens in the next, let's say this week, go lower. And I do still believe that we will ultimately do that, right? That is my current plan. So you can see if we put on this Fibonacci right here, we are essentially holding this 0.382, this 173, but I would definitely be shocked if we don't go at least to 160, like at least touch 160 minimum, like would be genuinely surprising. And again, I'm personally hopeful for about 145. That's kind of where I'm really like eyeballing, assuming this bull trend stays intact, of course. So that's kind of what I'm expecting as of right now, guys. That's more or less my current, I guess, analysis, if you will. The daily chart, again, like I said, the RSI is still not looking too hot, right? Still ultimately not looking like it's ready to reverse. Same on the 4 hours, looking a little bit better, but it's definitely not, not yet. I want to see some bullish divergences really start to form, and I think that's going to take another lower low before that forms. So for instance, if we do get this rally, as an example, to let's say this area right here, like 187, 190, and then go lower, I do think that this will go something like this. All right, so by the time we make this move to the downside over here around, let's say 145 or so, this should maybe potentially start forming a higher low, and that could start being the the initial stages of that bullish divergence essentially forming. That right there is something that I will be kind of looking for personally, right? And if you go to the 1 hour, for instance, you can see it is actually showing a little bit of bullish divergences right now, which to me tells me that there is definitely a possibility to get that bit of a rally initially to start things off before more pain actually truly begins. So that's kind of my analysis, guys. Let me know what you think down below. Again, ultimately, regardless of what happens in the next couple of days or whatever, I do believe that we still have another leg lower to go. But all that being said, thank you all so much for watching. Hope you enjoyed. If you did, don't forget to hit that like button, and I'll see you guys tomorrow for the next one. Peace.